What's up, everybody? How's everybody doing today? It's Big Cheds. I'm really happy to be here and making this video. This is going to be on my YouTube channel. This is the free version of my third book, Trading Quotes. I have a brand new book coming out this year, The Trading Journal, and so I want to take this last book that I published at the end of 2022, and I want to make it for free. I want to have a completely free version. I've already got a completely free version of my cancer memoir, and I have a pretty good free version of Trading Wisdom. You can get all of these books, of course, on Amazon and Audible. I've recorded an audiobook, but this is going to go into the new playlist, Trading Quotes. I'm Chet's Trading on YouTube. New traders definitely want to watch the masterclass technical analysis tutorial playlist. I teach professional technical analysis, Japanese candlestick theory, and classical charting. You probably know me from Twitter at Big Cheds, where I put out a lot of charts, a lot of information, and I am a founding analyst at Bitcoin Live, where I do a twice a week full market report with the best team in the world that studies crypto. I do quick updates as well here on YouTube 3 times a week. I do like a quick stream, so you can check those. So what we're going to do today is we have Trading Quotes. We're going to do chapter 1 and chapter 2, so really week 1 and week 2, and the book is split up into 7 quotes a day and 352 weeks, right? So, and these are all my original quotes, by the way. These are all things I put together after just years of thinking about things, and this all comes from my trading, my experience trading and going through the ups and downs, the emotional ups and downs of things. So my plan is I'm going to read the quotes, talk about them, and then maybe if I need to show you something on a chart, I'll do that. So let's get right into it. This is Trading Quotes. We're going to do week 1 and week 2. So week 1, Monday. Traders who forget to use stop losses magically transform into investors. This is a really interesting one, and this is a very popular quote when I put it out. It gets a lot of retweets and all that. People can relate to this. It's one of those things where, most of the time we just want to get in and get out for a quick profit. We're looking for just an opportunity. We're not trying to stick around forever. But what can happen is if it doesn't work out and you hold on to your position, you ignore your stop loss, you kind of all of a sudden now you were a trader, but now you're a quote unquote investor. Now you're starting to look outside the chart, and you're reading news, and you're looking for reasons, you're reading the chat room, you're looking for reasons to convince yourself that it's okay to still hold it. And so when you forget to use your stop loss, you magically transform into an investor. And so what you really want to make sure is that you're precise, right? And you start out with what you want to do. This is a trade, so I'm going to get in, and I'm going to stick to my stop loss. And don't let yourself turn into an investor. Don't let yourself magically transform. Tuesday, it does not matter if you understand or agree with the price action. Just trade it and move on. And that's true. It's one of those things where you can get really caught up in thinking that the market's supposed to do something. It's supposed to do one thing, but it does another. And you get all flustered, you get all frustrated, you get thrown off track. But what does it matter? You don't need to explain. I think people spend a lot of time trying to explain price moves, and you see it. Bitcoin's up $1,000 on this news. It's like you don't have to always correlate things. It doesn't don't spend all this time trying to figure out if you understand it or you agree with what happened. It happened. You just trade it and move on. Just accept the price. It holds support. Or it does not, it breaks resistance, or it does not. Just trade the action and move on. Don't spend all this time trying to, understand it and rationalize it and moralize it. Wednesday. So this is along those same lines. How the market responds to the news is much more interesting than the news itself, right? So you can read a press release. You can read a press release and think, wow, that's really interesting. That's really exciting. Surely the price is going to go up. But if it goes down, there you go. The market digested it, right? Because you're just one participant, right, in the market, right? And so everyone who has access to that information, some people maybe they bought ahead of time. There was a rumor, so some of the move is built in, or the news means different things to different people. News is interesting. I'm much more interested to see how the price responds to the news. And I think that's the way you should be as well. You should orient yourself. That needs to be the final answer. That's what the judge says, okay? Counsel on opposing sides, they'll have their own opinions and they'll make great arguments. But when the judge rules, that's the deal. So how the market responds is much, much, much more interesting. Thursday. This is a really important one. I mean, I think they're all really important, but relative strength, right? After the dust settles from a market flush, you want to focus on relative strength. Think about what was strongest beforehand and target those plays. So when you have the market trending, when you have the market kind of all moving in the same direction, what you want to look at is which ones are stronger than other ones, right? So for example, which ones are stronger than other ones, right? So if like everything is doing, if everything is generally sideways, but some things are within the Bollinger Bands, or some things are well below, or if everything is kind of looking like this, but some things are maybe riding the MA200. Some things are below, some things are above. You want to look at relative strength. So the stronger participants will be, above the MA200. They'll be showing relative strength relative to the rest of the market, to other market participants. And what will happen when the whole market faces volatility, when the whole market gets hit, right? When the mean reversion begins, when the bounce, whether it be a dead cat, whether it just be a minor move back, to consolidate and continue down, perhaps with that, you still want to be targeting relative strength. Whatever was strongest before the flush is most likely to be strongest after the flush. So you really just want to be trading and following relative strength, right? After, or just, on the best days of, I do a lot of crypto analysis, of course, and on the best days when the whole market gets just absolutely smoked, it's about the reaction afterwards, which can be unbelievable opportunity. And the weaker participants will have kind of mercy bounces and decent bounces, and maybe they'll bounce to their EMA 8. But the strongest stuff might go all the way to the EMA 34, MA 50, and then maybe even continue. But you just want to be playing relative strength, and you always want to have in mind what is the strongest, which is why you're continuing to practice, you're continuing to know what the best 4, 5, 6 best, charts in the market are. And so volatility, and along those lines is volatility, right? Volatility to a trader is like water to a farmer. Without it, nothing will grow. So you need volatility, right? Think about all the techniques that we think about all the techniques we've gone over in the masterclass tutorial playlist, right? Think about all the stuff we've talked about. Moving average cross, right? For a moving average cross, you need a trend, right? So if everything is sideways, these crosses really don't mean anything, okay? But if you've got like a sharp move down, and then you get EMA 8 or some short-term, moving average crossing over the longer-term moving average, you've got action because of volatility. You want volatility, you want volume, because when the price is trading in a range, you just get chopped out. On low volume, because volatility will also create panic, and that panic often will lead to opportunity because other people are panicking. Other people are making bad decisions. So volatility can reset a chart. You look for those Bollinger pinches. It's just a really important component for a trader. And you really want to go to work after volatility. And you want to be most careful and I think most suspicious in low volatility environments. Okay? This is an important one. And showing a little bit of empathy here for Saturday. Anyone out there who is struggling with trading and still loves it. You're struggling and you still love it. You have my respect. Love for the game is a great place to start. And if you add some discipline, then you'll have a winning combination. And I'm trying to connect with people here who really enjoy what they're doing and they want to get good at it, but it's just not working. And love for the game, right? That's good. That's a starting point. But what the thing is, you need more discipline. Are you even filling out a trading journal? Are you following strict criteria for entering and exiting trades? Do you have a plan? When you enter a trade, do you have a plan that you can describe to someone else and say, here's why I'm entering the trade? And then do you know when that idea will fail, right? Are you defining your risk? So you need discipline. Have you done have you read any textbooks? Have you done, the work that it takes to get better? So you have my respect if you're struggling and you still enjoy it, you love it, you want to make it work, but that's just a starting point. It's really the discipline which is going to separate you, right? Start doing push-ups. Start doing push-ups before each trade. See if, discipline yourself to do it. All of a sudden you're like, I shouldn't take this trade because I don't want to do the push-ups. But if the trade idea is good enough, you'll start doing the push-ups. You just have to be disciplined. Sunday. As soon as we find ourselves in a tough trading situation, we run to social media to find comfort in the words of like-minded individuals. We require this affirmation and the affirmation of others because we're not confident in our own trading plan. And this actually kind of ties in with the first one, Monday, right? Traders who forget to use stop losses magically transform into investors. You kind of get in that moment where now you're the investor, right? You went into a trade and you fail. It failed, but you held on to it. Now you're an investor, and now you're running to social media, and you want to hear from other people, other bag holders, other people who should have sold, but they didn't. And you want to hear them tell you it's okay because they'll say, hey, oh, no, why would I sell now? Look, they have a letter of intent. There's a new partner coming in. Oh, they just signed some guy, and he's ex-Microsoft. That's going to mean big things. All these, it's just convincing yourself, right? Stuff outside the chart and the affirmation of others. We require the affirmation of others. If you get into this spot, that is such a red flag. You have to get out, right? Because you're not confident in your trading plan. You don't have a plan. When you enter a trade, you need to know what the idea is, and idea is not just I want it to go up, so I'm going to buy some, or I think it should go up. I'm here because it's a throwback. It's retesting prior resistance, or strong hammer candle with volume after a move down, or something, right? Double bottom completed, and it's breaking the peak of a double bottom. I'm breaking resistance. It's a well-defined level. Something where you can say, here's why I'm in, and here's how I'll know I'm wrong. You have to have a clear plan and a plan that you can be confident in. You do not want to get into this trap where you're just there on social media, you're searching Twitter. I've done all these things, so don't get me wrong. I've been this person, right, many times, where you're like searching the ticker and you want to hear what other people have to say and help me feel better. Just don't get into that position, okay? Week 2. We're going to do week 1 and week 2. Okay. So week 2, Monday. It took me many years just to break even as a trader. Expect the journey to be difficult and embrace it. And you should embrace that journey. It's a lesson I've learned in life that if nothing worth it is not difficult. I mean, if something's easy, then it's probably, it won't last. It's not really of that much value. And it's one of these things where you go through a forge and you're reborn. That's how you're built, through the struggle, through the effort. And it took me a long time to figure it out. And I emptied out several trading accounts in the process, right? So, but I learned lessons along the way. And without going through that, without making those mistakes, and without pushing forward, I never would have made it. And it's more meaningful to me now having been through that process. So you should expect it to be difficult and lean into that. And you can lean into that by working harder. But if you think it's going to be easy, you're going to let your guard down, and you're going to get yourself into a lot of trouble, and you want to avoid that. All right, next up we have Tuesday. So this is important. So without careful risk management, your portfolio will not survive long enough to learn if your fundamental analysis is worth the paper it is written on. I really like this quote. And there's this long-standing debate. There's this long-standing back and forth, right? Fundamental traders and technical traders. And look, if you're in this play because they've got a new technology, they've got a new whatever, and they're going to beat their competitors, and they're eventually going to you have like a very complicated thesis or even a simple thesis, but it's a thesis that requires time to play out. So maybe you're right, but what if you're wrong? And the point is, if you're not managing your risk, then your portfolio is not going to survive. You won't even be able to stick around long enough to learn if your fundamental theory even is worth the paper it's written on, is even worth anything, right? So even if you're into whatever at 100, say it's 100, call it whatever, Acme coin or Acme stock, whatever, at 100, you can't just hold it down to 20 because you think they have great technology. Like, you have to have a plan. You have to manage your risk. So great, sure, be a great fundamental trader, but you still have to manage your risk. And that's based on the chart. And it needs to be. And Wednesday, a lot of people do this. This is a big mistake. Before you enter a trade, look at it on at least 2 different time frames. Observe the highest one, and then work your way back down and execute. This will drastically reduce your error rate. You see a lot of people, get in a situation where, where they're itching for a trade, they're itching to do something, and they want to play. They're bored, and what they're doing is, not much is going on here. We're looking at Bitcoin right now. Not much is going on here. Basically sideways. I mean, they're going down 1 hour, 13-minute. They're really zooming in. People will really zoom in when they're looking for action. You want to avoid that. But if you're going to do that, you got to at least step out to a larger time frame. So if you want to trade on the 4-hour, right, you need to know what the daily is showing you, like where the 4-hour trend is in relation to the larger trend. So you always want to be looking at the highest time frame and then work your way back down, right? Because you don't just stay in your one time frame. Just step back out one. Whatever time frame you're on that you normally trade from, step back one. And it can be very refreshing to check the weekly. If you're always doing daily, you go to the weekly and you're like, okay. It would just give you a larger view, a better view. You'll understand the broader trend, and you understand that trends tend to continue. So the minor movement that you're trading on that lower time frame is within the constraints of the larger time frame. So you want to make sure you have that higher time frame in mind. I have this quote in several different forms throughout the book. So I'll be probably going over this many times. But for Thursday, make sure to take profit before congratulating yourself on a winning trade. And it's so easy to do. This is probably one of the most common mistakes. You get in and you buy at support, and the price bounces, and you're green. You're sending the screenshot to your friends. You're bragging on Twitter. But did you take any profit yet? I mean, you have a paper gain. You have a gain on paper. I mean, is there even liquidity to kind of cash out or to take some profit at that level? Like, who knows? That's just the last price, last reported price. So until you pay yourself for a good idea, which I recommend doing, at least taking some profit. When you take profit, your remaining decisions are easier, and you pay yourself for a good idea. That's a good feedback loop. You want to do that. If you're never rewarding yourself for a good trade idea, then you're not going to go anywhere. Nothing's going to happen. So, before you congratulate yourself, before you're bragging, make sure you've taken some profit. I mean, that's super important. And it's the emotion. I go into this in my trading journal book a lot. The next one I'm publishing this year, I talk a lot about emotional management. And this is a scenario I address is, when you're on a hot streak, for Friday, be careful. The biggest losses often come after the biggest wins. Be mindful if you are on a hot streak. You can have a big win. Maybe you tripled that position. Just let's just say you clean. You tripled it clean. You sold out completely. You nailed it, right? It's almost tempting to feel like that's extra money or money you can afford to lose, right? Because we tend to get, I know I have, and I assume others do. We tend to get a little bit sloppy at that point where we think, hey, we've really got it figured out now. I don't need to wait for confirmation, or this looks good enough for me. And you just make a big mistake. You're overconfident and you have money that you just won. So you feel like you can afford to lose it. So the biggest losses really do come after the biggest wins. So when you're on a hot streak, you need to be really careful. And I think you got to be careful, especially if you're sizing be careful, like having a larger position size than normal. It's really tempting to do that. And so my biggest losses, have almost all come after wins and big wins. Here's an important one. Saturday, your bad trading habits, they're not going to fix themselves. Start a trading journal and get to work on those repairs. And that's what it's all about. You can be struggle, and your love for the game is not enough, but are you learning from your lessons? Right? Every time you enter a trade and you lose money, there should be a lesson in there for you. And that's the rebate. That's the value back. And you do that with a trading journal. And a really important thing from the trading journal is the mindfulness. You can teach yourself to be mindful and realize, wow, I'm a little bit overconfident here, or I'm revenge trading, or I'm feeling sorry for myself and I'm probably going to lose money. I have no confidence. It's just when you enter a trade, the trading journal will teach you to pause and to think about how you're feeling and what you're doing. It will cause you to slow down. And those bad habits you're having that are causing you to continue to fail, they're not going to magically go away, especially if you're not addressing them. And how can you address them if you're not even being aware of them? So you got to start to get to work on those repairs, and start a trading journal. Funny enough, I have a book coming out this year, The Trading Journal, just for you. Sunday, if you missed a great trade, you can sit around all day feeling bad for yourself, or you can move on and find the next one. And this is really easy to do. It's kind of like along with FOMO, where you did miss out. Fear of missing out. With FOMO, you get in and usually you jump in at the wrong time. You buy the top of a pump or something. Or you buy a chart buy without ever looking at the chart, which is a big mistake. So this one you actually did miss out. And now you feel so bad for yourself, feeling so down on yourself. And, I can't believe I missed that one. It would have been so easy. And not even FOMO, or like a setup that you saw coming. You saw a really nice setup coming. And the price dropped to right where you thought it would be, and you said, I want to buy there. And it got there, and you said, you couldn't pull the trigger. You were scared, and you missed out. Well, guess what? It happens. You can sit around all day. You can day feeling bad for yourself, or you can move on. There's gonna be another opportunity. We're looking at, in many cases, 24/7 open markets. And even and soon to be, I think, on equities is kind of trending in that direction. There's another opportunity, especially if you are disciplined, you study the charts, and you're ready for volatility. Because volatility is going to give you a great opportunity. So there's going to be more. So if you're feeling bad for yourself, I'd say step away and take a break. Just don't be moping around. You're going to get into a lot of trouble, acting like that. We're going to do week 3. And week 4 next video. This is part of the free version of my book. I'm doing the entire book for free, trading quotes. It's fun. This is actually fun. I'm glad I've gotten around to this. I can really expand on the quotes and create some nice content. I've published 3 books. I have a 4th book coming this year, The Trading Journal. It's Trading Wisdom Part 2, The Trading Journal. And so now I want to make this book free, my last book, Trading Quotes, which I published back in December 2022. I love this book. This is a super cool book. You see the journey 2021, 2022, the trader, he's been on the journey and then what he's learned. And so it's a great, really cool cover. So I enjoyed the book. I love this book. Thanks for hanging out here with me, hanging out and watching this video. Of course, I'm Big Cheds on Twitter. If you want to learn how to trade, I teach professional technical analysis for free, and start with the masterclass tutorial playlist. And kind of go on from there. Like, check out the quick market updates. I do stream 3 days a week here on YouTube, price updates, and I try to answer your questions. I do full market reports twice a week at Bitcoin Live. This is the best team in the world that studies crypto. I'm a founding analyst and have not missed a report in 6 years. So this was fun. I'll be back soon with another video. I hope you're enjoying it. Let me know in the comments. And all that stuff. And I'll talk to you soon. Thank you for hanging out here today. Big Cheds out. Peace out. Peace out.